The markets are tanking. Everybody's running east looking for a sunset. And when that happens, people don't want to put money in the market. So how do you invest in money markets? That's what we're going to talk about today. I'm just going to give you the definition of all the different products that are out there in that space, because these are a lot of the questions that we're getting, and hopefully give you enough education so you can make good, sound decisions that sits and fits with your core values. So once again, we've been talking a lot about asset classes and the importance of understanding each one, but diversifying within and amongst asset classes. So right here, if we look at cash equivalents, according to Investopedia, cash equivalents are one of the three main asset classes in financial investing. Along with stocks and bonds, these securities have a very low risk and a very low return. Inflation alert. That's all I'm going to say about that. Right now, we're at 40-year high in inflation, and this right here is not going to set you free. However, there's a lot of fear that goes on, and people want to put money in savings because they don't know what to do next. So this is why I'm providing the education. Treasury bills. We're going to talk about that first. Treasury bills are commonly referred to as T-bills. These are securities issued by the United States Department of Treasury. T-bills are sold from a minimum of $100 to a maximum of $5 million. They do not pay interest, but are provided at a discount price. So, God forbid if I was to shuffle off this mortal coil, and please make sure this video isn't one that we play in because I'm not here. But with that being said, if my wife has a job, which she does, and all of a sudden got a $10 million check, which she would, and wanted to put $5 million in here, they mature either within a couple of days or up to 52 weeks. However, if she put $5 million in, and let's say she wanted to do it for 90 days, she might hypothetically, this is a hypothetical, she may be able to purchase it a little bit less than $5 million, let's call it 4.95. And then when it matures in 90 days, she'll get the difference. She may want to just keep doing that over and over again. She'll have to sit down with her fiduciaries and her people to give her good decisions. But this is for someone that doesn't want to lose money, that is looking for super duper conservativity. And in that space, this is some of the things that would be thought about. Okay, so let's talk about number two, which is commercial paper. Commercial papers are used by big companies to receive funds to answer short-term debt obligations, like a corporation's payroll. They're supported by issuing banks or companies that promise to fulfill and pay the face amount on the designated maturity date that would be provided on the note. Now, basically, if a company's in trouble and they got good credit, good relationships, this is where, if they need to make payroll, this is where it could be a good play. So to be clear, like if you're an individual investor that doesn't own a big corporation or doesn't have a payroll with 50, 75, or 100 people or more, I don't really think this is something you really have to look at. However, you never know, the education is great and someday you may own a company like that. So it's always good to be informed. So let's talk about number three, which is money market fund. A money market fund is a kind of mutual fund that invests in highly liquid, near-term instruments. This includes cash equivalent securities, and high credit rating, debt-based securities with a short-term maturity, such as U.S. Treasuries. Money market funds are intended to offer investors high liquidity with a very low level of risk, and that's according to Investopedia. It sounds, it smells, and feels like, okay, this is very safe. Maybe it's going to do better than a savings account, but at the end of the day, it's not going to change your world if the market goes up and if the market goes down. Your money's going to kind of stay intact and you're going to have your principal. Number four, short-term security bonds, according to Investopedia. Short-term government bonds are provided by the governments to fund government projects. These are issued using the country's domestic currency. Investors take a look at political risks, interest rate risks, and inflation when investing in government bonds. So folks, listen, go get with your fiduciary. I mean it, because listen, these rates are kind of very low. Some of them are negative actually. And it's important to understand what it looks like, because at the end of the day, all of these things I just mentioned are really about preservation of capital. Understand that for the folks that are just terrified of the markets, terrified of alternatives, and they want to just put their money into a place that may earn more than money in a checking account, these are some of the instruments that are out there. So let's go over the pros and the cons. The pros first, really, I mean, at the end of the day, your capital is still intact. It doesn't pose a capital risk. It is backed by the government and assets are easily accessible. Now, on the other side, the cons, your biggest threat is inflation. I mean, if you're getting 1 or 2% on this and inflation's at 8%, that's a risky investment if that's where all your money's going. Once again, that's my opinion though. You have to get with the right people and ask the right question. And it provides limited opportunity for growth because at the end of the day, liquidity, yes, preservation of capital, yes. Once again, to be able to take advantage of opportunities that the market presents itself, it's probably going to be limited. Now, listen, you could be 80, 75, 85 years old. These are different conversations. Or you just may not have any flavor to put money in the markets. This is kind of the flavor that you may want to talk about with your fiduciary. So we always talk about it. Go ask 3 fiduciaries about what we just talked about. Get different opinions and make sure you understand how to ask the right question. Go ahead and click the link below if you want to talk to